Imagine it's 2002. Someone walks up to you and says, "Hey, I'm starting a rocket company. We're going to colonize Mars." You'd probably back away slowly. Now fast forward to 2026, and that same company is about to go public on the stock market at a valuation of $1.77 trillion. To put that number in terms we actually understand here in Australia, that is roughly the entire economic output of this country in one company. That builds rockets. This is the SpaceX IPO. And whether you plan to invest or not, this is one of those moments in financial history that is worth actually understanding. And so in this video, I am going to break down exactly what is happening, what the numbers mean, what the risks are that the headlines are not shouting about, and how Aussie investors can actually access US-listed shares like SpaceX. Let's get into it. SpaceX was founded by Elon Musk in 2002 with a goal that at the time sounded genuinely delusional: make space travel cheap enough to eventually put humans on Mars. Most people laughed. A few invested. 24 years later, SpaceX has become the backbone of the modern space industry. They design and launch rockets. They put satellites into orbit for governments and private clients around the world. They run Starlink, a global internet service beamed down from thousands of low Earth orbit satellites, including across regional Australia. And they are now pushing into artificial intelligence through a subsidiary called xAI, with plans to build data centers in space by 2028. Here is the stat that puts their dominance into perspective. SpaceX currently handles the majority of all commercial rocket launches on the planet. They are not just in the space industry. They basically are the space industry right now. On the 20th of May 2026, SpaceX filed for its IPO with the US Securities and Exchange Commission, the American equivalent of ASIC here in Australia. They plan to list on the NASDAQ, one of America's two major stock exchanges, under the ticker symbol SPCX. They will also trade on the newly launched NASDAQ Texas Exchange, which makes geographical sense given SpaceX is headquartered in Starbase, Texas. Now, here is where the numbers get genuinely mind-bending. SpaceX is selling 555.6 million shares at $135 each. Do the maths. That is approximately $75 billion raised in a single listing. For context, Saudi Aramco's IPO in 2019, previously the largest in history, raised around $29 billion. Alibaba raised $25 billion back in 2014. SpaceX is set to more than double the previous record. The total company valuation sits at nearly $1.77 trillion. That would make SpaceX the seventh largest company in the world by market cap, sitting just behind Nvidia, Apple, Microsoft, Alphabet, Amazon, and Saudi Aramco. It would be bigger than Tesla, bigger than Meta, bigger than Berkshire Hathaway. Here is how the IPO process actually played out. The investor roadshow kicked off around the 4th of June. This is where SpaceX pitches the deal to big institutional investors like super funds and hedge funds before opening to the public. Share sales began as early as the 11th of June at the IPO price of $135, and public trading on the NASDAQ opened around the 12th of June. Meaning, from that point, everyday investors could buy SpaceX shares the same way they would buy any other stock. Now, here is one thing that is really important to understand. The price on day one of open trading can look very different from the $135 IPO price. Big IPOs often jump 20 to 30% on opening day, driven by demand and media attention. Which sounds great, unless you are the one buying in at the top of that initial spike. Also worth knowing, SpaceX reserved up to 5% of IPO shares for employees and certain individuals. The bulk of the initial allocation went to large institutional investors. Retail investors, regular people like you and me, typically only access shares once they are trading openly on the market. Here is where it gets practical for us. Once SpaceX is listed on the NASDAQ, any Australian investor with access to US share markets can potentially buy SPCX the same way they would buy a stock on the ASX. There are 3 things you will typically need to sort out first. Number 1. A brokerage account that supports US share trading. Several Australian platforms now offer this. Number 2. A W-8BEN form. This is a US tax document that confirms you are not a US resident. Filing it reduces the withholding tax on any US dividends you receive from 30% down to 15%, thanks to the tax treaty between Australia and the United States. Most modern platforms handle this electronically during sign-up. It is not the painful paper process it used to be. Number 3. Converting your AUD to USD. When you buy US shares from Australia, your money needs to be in US dollars. The exchange rate and any conversion fees will affect your actual cost per share, so it is worth paying close attention to that. Once all of that is set up, searching the ticker, entering your amount, placing the order. It works just like buying a stock on the ASX. All right. This is the part of the video I actually care most about, because here is the thing about massive record-breaking, once-in-a-generation IPOs. They trigger something very specific in the human brain. Psychologists call it FOMO, fear of missing out. And it is deeply powerful, especially when every second headline is telling you this is the biggest thing since the internet. So let me walk you through what the hype is not telling you. IPOs are historically volatile. In the first few weeks of trading, prices can swing dramatically as the market works out what the company is actually worth. And that volatility cuts both ways. The XAI subsidiary lost $2.47 billion in just the first 3 months of 2026. SpaceX flagged this as a key risk factor in their own IPO filing. That is not a small number. That is a genuine cash burn that every investor needs to factor in before making any decisions. Lock-up periods matter. Early investors and employees are usually restricted from selling their shares for a set period after the IPO. When those restrictions lift, you can sometimes see a wave of selling hit the market, which can push the price down significantly. Currency risk is real for Australians. When you invest in US shares, your returns are affected by the AUD to USD exchange rate, not just the stock price. A US stock could rise 10%. But if the Australian dollar strengthens against the US dollar by the same amount, your actual gain in AUD terms could be close to zero. And the tax picture has changed. Any capital gains you make on US shares are subject to Australian capital gains tax. From the 1st of July 2027, new CGT rules come into effect. The 50% discount on assets held over 12 months is being replaced with an indexation method plus a 30% minimum tax. If you are thinking long-term, that is worth understanding before you buy. And finally, the history lesson that is worth sitting with. Facebook dropped nearly 50% in the months following its IPO. Uber fell more than 40% in its first year. Alibaba hit its IPO price and then spent years below it. Big, hyped, record-breaking. These words describe an IPO. They do not predict returns. The SpaceX IPO is a genuinely remarkable moment in financial history. The scale of it, the company behind it, the sheer audacity of what was built from a standing start in 2002. It is hard not to find that story compelling. But here is what behavioral finance research consistently shows us. The more exciting an investment feels, the more careful we need to be. Our brains are wired to chase narratives, and SpaceX has one of the most powerful narratives in modern business. But that narrative is not the same thing as a sound investment thesis. Whatever you decide, read the prospectus, understand the business model, look at the actual numbers, and if you are not sure, talk to a licensed financial advisor before you do anything. The fundamentals always matter more than the hype, even when the hype is this loud. If you made it this far and you are feeling informed rather than just excited, That is exactly what this channel is here for. Drop SPCX in the comments below if you found this video useful. It genuinely helps me know what content is landing with you. And if you are new here, welcome. This channel is all about understanding money better, not just following the crowd. Hit that subscribe button so you do not miss the next one. See you in the next video. And quick disclaimer, this video is for educational purposes only and should not be considered financial advice. Any investments or stocks mentioned throughout this video are for educational purposes only and are not buy recommendations. Always do your own research before making any investing decisions. And if you would like personal financial advice, please speak to a licensed professional.